mortgage industry and real estate, they go in the same direction. It's like a bunch of silverfish in the ocean. They all turn it the same way, at the same time. I mean, I think with your marketing and what you do, don't you just kind of want to change things up just for the sake of changing them up? Well, we can do that and get you those 2 or 3 deals per month consistently that you need. If you want to find out how, just text Booster to 33655. And no, it's not just about listing Booster, but text Booster, BOOSTER, to 33655. I don't know if you guys saw this, but the California Department of Real Estate, that's called the CDRE, filed a complaint against EXP, the real estate company, citing 72 state regulation violations. Now, this is interesting. EXP, of course, is the tech-based online real estate service that outdid the Keller model. But this is only in California. Now, I don't have the knowledge to speak intelligently about this case specifically, but I can tell you this, not about EXP, but in general. There's a whole bunch of new tech-based real estate companies / mortgage companies / hybrid real estate and or mortgage companies like OfferPad, Open Door, Zillow, and Keller with their mortgage company, and so many more that are playing fast and loose with the guidelines that most of the mortgage industry have taken up as the gospel and follow as judiciously as possible. So this, by the state of California, lets us know that compliance is not dead in the water in spite of what you might think right now. It makes you think, though, perhaps the attorneys general of other states might be considering the same type of actions against other companies. I wouldn't be surprised with how fast and loose everyone's playing with the rules. You know, kind of like the state of New York, who last week just started their very own Consumer Financial Protection Bureau, CFPB. And we just brought you this story last week. The state of New York doesn't feel the actual CFPB is doing their job, so you now have the NYCFPB in another state, the New York Consumer Financial Protection Bureau, whatever the hell they call it. Now, the two biggies, California and New York. Both states, as you well know, are bullish on compliance issues, which is bull if you ask me, but really nobody's asking me. Now, I'm gonna tell you the problem that this creates for you anyways. In an economy that always crosses borders like we do right now, any infraction, it could be in New York or California, or even in Mississippi, Minnesota, or Oregon, might as well be the whole country, because when one product that you use in California also markets in Kansas, a California infraction will affect you and your product and processes over in Kansas. And I'm going to explain this to you, so just remember the term euphemism. When we come back to that, we're coming back to this part of the show. Yet it's not to say that all compliance is dead over at the actual CFPB, because evidently Director Kathy Kraninger just pulled out her defibrillators and bump started the pulse at the Bureau by filing a lawsuit against 2 credit reporting companies. She and they say the credit repair companies are charging money for what they shouldn't be charging for, and now they're getting busted. And this is not terribly surprising when you think about credit repair. I just saw a post from a loan officer saying he's done with credit repair, that it never works. Nothing personally says, it just doesn't work. Now, here's my question. Why is somebody, one of your clients or aspiring clients, actually in credit repair? Answer, they don't pay their bills and have a history of not paying their bills on time. So credit repair, to succeed, requires more than a credit repair company doing their job. It requires the client or aspiring client of yours to change their habits, to change their identity as a responsible person. Now, to become responsible where they have not been in the past, that's a tough one, isn't it? Because what you probably know is habits, I've got to tell you, are the absolute hardest thing in the world to change. Nearly impossible. One last point that ties all of these together. You know, here comes the term euphemism I told you to remember a moment ago, talking about California busting EXP, or New York forming their own CFPB, and the CFPB actually busting credit repair, and how I said it's all related. Euphemism. I want you to think about this. Here's how it ties together. Let's say you're a loan officer, a real estate agent in, I don't know, Kansas, and you refer somebody to a credit repair company, and the CFPB or the NYCFPB busts one of these credit repair agencies for usury. Are you now in Kansas using the same busted company now liable for your referral over in Kansas, even though this occurred in another state? Well, the answer is probably not. But how close to that flame do you want to get your license? Cross states, guys. Just be careful with what you do and only conduct yourself with credible, responsible companies and folks. For credit repair, I'm not sitting here just bashing it. If you want to talk to credible credit repair people, talk to Doc Compton or Sam Parker, because from what I can see, hear, and tell, those two are pretty much straight shooters and might be able to help your your aspiring clients with their credit. Let them know, however, that credit repair is like dieting. If you don't change your habits, your core, then it's only a matter of time before you find yourself back in the yuck with bad credit. It also applies to marketing too, but that's another story for another day. Make it a great one now. Be